I'm going to kick off and say thanks for joining us for the webinar today. My name is Leah Renwick and I'm the State Manager for the East Coast here at the FBAA. This morning we'll be joined by Donelle Brooks, Head of Third Party at Lend, who'll be presenting on working capital, how to utilise different products to assist your client. Shortly I'm going to pass you over to Donelle. However, just to let you know, should you wish to ask any questions during the presentation, please provide these in the question box on your control panel for the webinar. I'll go through these at the end when Donelle and I have wrapped up. The recording today will be going onto our FBAA YouTube channel. It'll be following this within the next 24 hours and you'll also receive a link in the follow-up email which will include your CPD code. So for now, I'm going to pass over to Donelle, who's joining me this morning to commence her presentation.
Good morning, everyone, and I am just waiting to be able to present. So I'll just make sure that Leah has handed over the presentation. Perfect. So I'm assuming everyone can see my screen now. So guys, thanks for joining us today, and I will try not to take up an hour. I appreciate that there's a lot of things going on at the moment in Zoom and GoTo and all different types of online formats. But what's really important at the moment is to get an understanding of the different types of working capital products that are out there. So the standard unsecured cash flow type of lending is really not as popular as what it was pre-COVID. So just quickly today, I wanted to tap into some different types of working capital and then also go through some scenarios with you from some loans that have been funded by people on our panel. So what are my options? So it does come in a variety of forms. So whether it's unsecured or secured, line of credit and overdraft are certainly buzz products at the moment, or even if it's discounting or invoice factoring. So we're going to give you some tips today on how you can understand what is the best product for your client. So an unsecured business loan. Now this can be used for any business purpose, and this is the first one that we're actually going to talk about today. So the decision is typically determined from just the business bank statements. And so we know that these can be affected due to COVID. So let's have a look at some considerations around the unsecured business loan product. So the application process is usually fast, simple, and typically now it's online. Finance is available without security of property or any other fixed assets that the business may have. This finance is typically available and most suited to smaller businesses that don't meet the mainstream rigorous lending criteria. Serviceability must be demonstrated with an unsecured business loan product. The minimum trading length at the moment for alternate lending is 12 months. Now be aware that unsecured lending finance right now is a higher risk than ever for the lender. So the interest rates are likely to be higher, and also the credit policies at the moment are ever shifting. So they will be looked at probably more hardly than ever. Terms, rates, fees and conditions may result in higher borrowing costs, so it's really important to understand how the loans are structured in the unsecured space. Depending on the amount that your clients may want to borrow, they will need to provide a personal guarantee, so please make sure that your directors are aware of that and your sole traders. Loans up to a maximum of 120% of the monthly revenue is typically what's available now. So in really, really easy terms, if you've got a client who's turning $50,000 a month and they're looking to borrow, 80 plus, that's going to be a really difficult deal to get across the line. But 50 a month and 70 to 75, you're definitely going to be able to put that deal up to one of the unsecured lenders. So let's just have a quick look at a scenario that's been funded by one of our lender partners, and we're grateful, we are grateful, there we go, everyone's got to have an error on a Zoom call. So this is a client who needed working capital due to some new contracts and also to manage their creditor payments. So they're a family business in logistics for 30 years, and so they actually had little effect on their business as they were actually classified as essential services. During the first COVID shutdown, they also completed a restructure and a buyout. What solution did one of our lender partners provide? based on the discussions between the client, the broker and the lender, it was obviously significantly evident that by increasing revenue, reducing their expenditure and helping by improving their debtor collection, the business would be in a much better position. So a 12-month P&I working capital loan was provided at a really good rate for non-bank lending, and it was funded to the client within 3 days. Now we're going to have a look at invoice and debtor finance, and certainly over the last 6 to 8 weeks, the Lend panel has really extended the amount of partners we have in this space. It can release cash flow. So don't let slow payers hold back your client's business. It's really, really important to start having a look at this product and understanding what solutions it can provide for your clients. So let's just have a quick look at invoice or debtor loan considerations. It's an immediate cash injection, so funds can be typically in your client's account within 24 hours. Your client can avoid the hassle of collecting debts and freeing up their time to concentrate on their business. Your clients may actually be more likely to pay on time when a factor is actually collecting the debt. And factoring companies will often perform the credit assessment on your client's customers. So the client may be able to use the information provided to also negotiate better payment terms. It's quick and easy to arrange. There's usually no lengthy application process and the criteria is not onerous at all. Factoring does, though, reduce the profit margin on each invoice that your client sells. And availability and the cost of funding is actually determined by your client's customer's credit rating as opposed to their own. Last thing to be aware of is if your client decides to end their arrangement, they do have to buy back any unpaid invoices, which may have quite a big impact on their cash flow. So it is one just to be aware of. So let's have a look at something that's been funded by one of our partners. So again, they're an essential cleaning supplies and they needed funds for expansion and payroll obligations. So basically they reached out to see if the lender could provide additional support to a new entity that they had to develop to support the surge in commercial cleaning. So the increase for demand in their services meant that they had a cash flow gap that they needed to bridge and required funding to source essential supplies. They needed to keep up with their creditor commitments and they needed to meet their obligations. So in a really short period of time, the lender was able to provide this business with an invoice finance facility of $100,000. So that enabled them to comfortably meet their commitments, provide ongoing cash flow support to their business growth by releasing 80% of the value of any new invoices issued. So remember that this is a really easy facility to revolve. New invoices, new work, new line of funding. So now we want to have a look at secured business loans. Now these are typically, let's not get confused with private lending in this space. We're really actually talking about secured business loans. So where you use the equity in your collateral to actually obtain funding. So typically you will have a choice of interest only or interest plus principal repayments when obtaining a secured business loan. Vehicles, equipment, yellow goods and property are common security types to access funds. Serviceability must be demonstrated. This is not an equity and exit type product. It is not fully reliant on the value or the equity in the asset. So serviceability must be demonstrated. Loans still will be typically up to the 120% of monthly sales. Loans that are secured by equipment as opposed to property sometimes may actually attract higher rates. Again, in the alternate space, because we're not talking about equity and exit strategy products, the minimum trading length requirement is still 12 months. And offering security for a loan may also improve your client's credit profile to sort of assist you, in obtaining funds for them. So even though we're going to go through a scenario, I just want to touch on this a little bit more just to make sure we're really understanding the secured business loan product. So you've got a client who's only been trading for 12 or 13 months. So right now, as a result of COVID, this is seen even more so as a very, very early business. Your client may want to get access to 20 or 30 grand's worth of working capital. They have a truck that they own that's worth $120,000, and their cash flow has been reasonable as they're a new young business. You can access the equity in that client's truck to obtain the working capital finance loan for $30K. So just remember, it is about the value and the equity in the type of asset that you're wanting to use to secure the product. But again, it's really important to understand that serviceability and length of trade are definitely considered with this product. So we'll have a look at something that is on the small side, and you can imagine now that an events management company has been heavily affected by COVID. So as they started to move out of the effects of COVID-19, they needed 25K. They've been established for 8 years, but had a heavily reduced income between March and May. They required the funds for pure cash flow purposes to prepare for upcoming work that's now starting to recommence for them. The client has got a small paid utility default that is 3 years old, and the client has been declined by the bank due to this credit impairment and was offered 15K for an unsecured cash flow loan due to the inconsistent income. Now, the client does own 2 unencumbered vehicles. So the lender on our panel was actually satisfied that the client was going to resume full trade and they had demonstrated creditworthiness. The ability to service and return to pre-COVID income was already indicated through some strong income during May. By offering a secured loan, the lender could increase the term and therefore fulfill the client's requirement of 25K. And again, this is where the advice piece comes in and the conversations that you're having with a client. We need to set expectations and we need to understand those top lending limits that our lenders are actually offering at the moment. So again, and I know I may be repeating this message, but if you have a client who is turning $50,000 a month and wants an unsecured loan of $150,000, it's not going to happen in the current environment. So that's again why we're really talking about the different products today. Do they have security which they can add to the application to increase the loan amount? Do they actually have that amount sitting on their debtor's ledger where they can actually utilise that to get the capital as opposed to an unsecured loan? So the buzzword at the moment is line of credit and overdraft. So it's obviously an agreed amount that's made available for you to access when you need it. You only will pay the interest on the drawdown amount and not on the whole facility. So again, this can be a great product for clients who are really looking to manage their cash flow over COVID recovery and may only need to access portions of money each month. So when we have a look at line of credit and overdraft considerations, we need to think of the product is extremely flexible. Draw and repay funds as your clients need them. So again, where this may work is in hospitality. You've got a client who has pivoted their business and has moved to takeaways. So their cash flow isn't as strong as it's been, but there's certainly some cash flow and they're recovering. They may need 30 grand for the next 3 months to help them out whilst they're in this recovery period. Do they need 30 grand right now? No. Do they need 10 grand a month? Yes. So again, it allows them to draw and repay as required. They'll only actually pay interest on that amount as well. So it is usually calculated daily, but you only pay interest on what you've drawn down. Again, it's a quick and simple application process, and it's really well suited to clients with lumpy or inconsistent income, because what it can do is help support the business during the down period and allow them to really take advantage of their busy periods, whether that be through stock, staff, whatever it may be. Loans secured by non-residential assets attract higher rates, but also please be aware that the line of credit can be a secured and unsecured product. So again, security may be required to help strengthen the application, But again, if you are a strong cash flow business, then you will actually be able to get an unsecured line of credit. Terms vary, and you may be required to pay at certain intervals depending on the product, and you are likely to incur some fees even if you don't use the product. So let's have a look at an example. We're looking to manage seasonal cash flow, and that's why I touched on this. So you think of a regional service station who obviously their business is very based on seasonal travel and tourists visiting their business. So they also have a lot of truckies call in, you know, for their coffees, meals, etc., and their little bit of downtime. So due to COVID, obviously the tourist traffic was quite down compared to normal, but they were still getting very strong truckie traffic. So the reason why the lender provided this client with a $20,000 line of credit facility was to minimise the business's risk and allow them to be covered and prepared based on varying circumstances. So again, as mentioned before, when the business is busy, the line of credit can be used to utilise stock demands, and in the quieter times, it can be used to cover costs. So again, this is a great alternative for your clients in the current environment. Now we're going to touch on one that some of you may not know about, and it's certainly been an old school product, which again, in the retail and online retail space, has really started to have quite a resurgence in the market. So it's a lump sum payment in advance, and then the payments are collected at an agreed percentage of your daily sales. So it's a quick and easy online application process. It's an immediate cash injection of funds, which are usually available within 48 hours. And the repayments are directly linked to your client's cash flow. So there are no fixed interest repayments or repayment schedules, and the repayments are made as an agreed percentage of sales. So what this does is on a quiet day, you will only pay the same percentage, so it won't hemorrhage your cash flow. When you have a big day and a busy day, which we all want for our clients, then obviously that percentage will mean a heftier amount off the loan. It is only available to merchant businesses making daily debit or credit card sales, and so that includes online. History of achieving a minimum average level of sales may be required. So that is that, you know, on average, the client turns $100,000 a month in sales. It can be considerably more expensive than other financing, but it does give you the ability to pay back the loan based on the success or the good times and the bad times of the business. So I want to give you an example of where the merchant cash facility has really supported a business, and this is actually a local business to us on the Gold Coast. So it's an online retailer and they've had a steady cash flow, but they needed to raise some working capital to expand on their product range that's sold online. So the client had attempted to obtain finance through mainstream lending, but was actually finding the process to be quite difficult in the current environment and a slow process. All revenue for this business is received through online payments. So the client received the capital they needed through a merchant cash facility. When business is slow, the client pays less. When business is booming, they repay that facility faster, which is exactly what happened in this case. With the variable payments being a percentage of that client's daily intake, it means that once the new products were released and the online sales did actually increase, they paid that facility out much, much quicker than expected. So, as I said, I really wanted to cover off some of those really important products to alternate lending and non-mainstream right now. Please be aware that there are different solutions and different ways to access capital for your clients, and a team at Lend are really happy to discuss scenarios with you, and we highly encourage you to continue chatting to your BDMs. The Lend platform is here to support the way you transact your commercial loans. We really want to facilitate and help grow those relationships with your BDMs. So inside the Lend platform, you will have access to all of the lenders, their contact numbers, so you can ring and chat those scenarios. And then if it's going to float, all we ask is for you to transact it in the Lend platform. So I know we've got a couple of questions today, and I guess Leah will come back in and join us now. While I'm just waiting for Leah to come back in and answer some of those questions, I would just like to say, for those of you that don't know, the Lend ED series is now available on the Lend platform and is supported very strongly by the FBAA, and you will be awarded CPD points. So if you are new to commercial lending, I cannot recommend high enough for you to watch some of these Lend ED series. You can drill down by all of the products we've discussed today, and you can hear from the lenders. Either sometimes it's the owners or directors or CEOs of the lenders, and other times you're hearing directly from the BDMs about the product, the real information, the do's and don'ts, and the documentation required. So definitely recommend you jumping on Lend ED and reach out to Georgia or I if you haven't registered yet. Leah Renwick, you better come on in.
I am Miss Donelle Brooks. Thank you very much, sitting in the background here very quietly. Guys, I just want to especially to say thank you to the team at Lend and to Donelle for today's presentation. I mean, obviously, it's been a busy few months for everybody, and I think it's been a very trying month. So, you know, thanks, Donnie, for spending your time going through everything with us today, and we do appreciate the support that we have from you and the team at Lend. Now, to go through a couple of questions we've been sent through, it's a pretty interesting day out there today. So, Donelle, for you, I'm just having a read through some names, and if I do get your names wrong, I'm just going to apologise in advance. But Khan Arshad wishes to ask, can they receive product policies, pricing and calculators for each of the lenders?
Excellent question, and certainly as far as calculators for each lender, that is a difficult scenario in non-bank lending, and that's because really the alternate lenders are assessing based on risk. So you may have a rate range that may move from 9.95 per annum to 26 to 30% per annum, depending on that profile of the client. So we would love to do that. And, you know, let's hope that it's, you know, going to be part of a later iteration. But for now, we do offer a affordability calculator, which is an interesting way to look at it, which is all based on what does your client want to pay per week in a loan payment? What can they afford in their business right now? And it will use average rates across the industry to give you an indication. As far as the lender's policy and their minimum maximum rates and terms, 100%, it's available in the lender profile section of the Lend platform.
Perfect. Now, Shah Deval wishes to ask, can you help getting business loans to new established businesses to new directors? Now, deciphering between that, I'm assuming is, can you get a business loan for a new established business with new directors?
Absolutely. So look, there's always a couple of things to take in consideration here, and certainly that equity and exit product that we touched on that wasn't part of this presentation is something where you can access those funds quite easily. So that being, if you've got enough equity in an asset and you've got a great exit strategy, then a private lending or a caveat lending option may be the best for you. However, if you have financials, forecasts, and the directors have been working in the same industry for more than 3 years, there are a couple of options on the Lend platform, but you definitely need to have, which we know typically in alternate we think less documentation, but when you're talking about a startup or a new business with new directors being brought on, there's going to be some requirement for extra documentation. So there's a couple of lenders out there that will do it, but it is few and far between. Reach out to me, happy to do a couple of intros to the BDMs who are working for those lenders so that you can have a chat to them.
Perfect, love a good BDM introduction. So we've got another question in from Islam Rashid. His aggregator is Fail Financial. Do you have integration with our net software?
Hey, look, love VoWnet software. Have known Dave Stewart for a very long time, and I know he did a lot of work on that project. So no, there isn't an integration with VoWnet, and it's actually a great question. So for anyone else who is actually listening today, I'm going to give a general answer around the aggregator question, because I know we do come across it quite often. And what I want to say is that the Lend platform, we're here to help brokers transact commercial finance and commercial finance only. What we also want to encourage is that you do speak to your aggregator heads, whether it's your state managers, you know how you need to communicate with each of your aggregators, and let them know. We welcome any conversation with any of your aggregator BDMs or state managers to talk about why you would be wanting to utilise the Lend platform. So look, as I said, we're not going to deny anyone access to the platform, but we strongly recommend that you let your aggregators know that you will be transacting some commercial stuff off panel.
Perfect. Now, Eve would like to know, what is the range of interest applicable for the line of credit?
Great question. So we start at 8.95 and move through anywhere to sort of high teens. So there's several lenders who offer the line of credit product or an overdraft product, and it's all based on the risk profile of the client. So if you have a client who simply just cannot wait for the bank, or may have, you know, not have 2 years of financials, have every other year done, but just not the most current year. If you have a client like that, you will find that they will definitely get offered at the very low rate range. If you've got a client who's got, you know, a couple of issues, but certainly has a great business, then you may find them at the higher range. But you will always get an indication. That's part of our agreement with our lender partners, is that they will assess the business without hitting the credit file up front. So you can at least discuss these scenarios and put them through the Lend platform, and you'll get some indications, because we know that even inquiries can have such an impact on your client's file.
Mm-hmm. Okay, now if I get this name wrong, I apologise in advance. I've got it as Sanihi, and it can be, and the question is, can temporary residents borrow with security for business use?
Yes. There you go.
Short answer.
No, look,
very short answer.
Exactly. Look, some of you will know that I've worked as a broker and a lender in my history, so I certainly know that when you have property security, so let's make that clear, when you have property security, yes, we have lenders, and many of them on panel, who can support temporary residents. Must
Perfect.
be property.
Now, Janica wishes to ask, in secured lending space, for example, when vehicles or yellow goods are being offered, does it have to be 100% unencumbered?
Look, there's probably, what I'd like to say, Janica, is the rule of thumb is it needs to be unencumbered. It really depends on the value of the asset. So if you have, you know, a truck that's worth, you know, $250,000 and you've got a $50,000 balance on it, that may give you the opportunity to utilise the remaining equity in the product, in the truck, to secure the product. But if you're using a, you know, a 20 or 30 grand vehicle and, you know, you've still got a balance of over 50%, no. So I'd rather be upfront and honest, but, you know, to our knowledge, that's how it works. The bigger the value of the asset being used, then you can have a look at the fact that you might be sitting behind somebody else. The smaller the value, no.
Perfect. Nikki would like to ask what the options are available to purchase new and established businesses.
Okay, excellent. So Nick, I'm happy to shoot you through those on an email. So brand new businesses that have not been established, obviously we're looking at security for those loans. Buying an existing business, we have quite a few lenders on panel. So just to reel off a couple for you, Banjo, we'll look at that with full financials of the existing business. And Get Capital will also consider that as well. So there's a couple of options there for you.
Okay, this is a bit of a curly question coming through from Giles. If you have an existing invoice finance facility, can we incorporate a new client to the facility without your consent?
So just ask me that again, Leah.
So if you have an existing invoice finance facility, can we incorporate a new client to the facility without your consent?
No. So, and I just want to make sure I'm getting the question right. So Giles, if you need to just shoot Leah through another message to make sure you're right. So the invoice facilities are great because you may actually get more work on. So you've got a certain invoice and a certain facility, and then you want to bring on more invoices to extend that limit. Absolutely, the lender is going to look at that. If you're asking whether the lend platform is removed from that transaction, absolutely, because once the client has established a relationship with the lender directly, it's a typical refinance in the unsecured terminology, or it's just rolling over that invoice. So I hope I've answered your question, and if not, you've got my number, or Leah can give it to you. Just give me a call and we can chat through it.
Yep. And just look, we'll wrap this up with a positive one from John Ning, who says Lend ED is great. He's watched 4 to 5 videos in the last 2 weeks, and his CPD points are just a bonus to that. So quite happy that John's thrown that one in from the sideline for you there, Donnie. And I'd have to agree that the Lend ED series have been fantastic that have been turning up online. So encouraging everybody to jump online and get in and read them as well.
Absolutely. And John, thanks so much for your commentary. And definitely you need the foils, mate, from your Facebook photo. And those that follow John will know that he's been posting some nice photos with himself with a wig on. So thank you, John. And yeah, look, it really is. Lots of people say, is the Lend platform something to transact on, or is it an educational platform? And the answer is both, because the more you know, the better you'll transact. So, you know, we will be rolling this series out every year. We will be updating the content twice a year. So we really want to keep that content current. And every time we bring on a new lender, we're doing the interview with them straight away as well. So honestly, guys, if you want to know, if you're new to the industry, jump on and have a watch.
That's perfect. Johnny, I just wanted to say thanks again for today. I found it, even from my side of things, every time I hear you speak, there's always something that I managed to pick up off the back end of it. And I've learned again today more about the Lend platform. Guys, just a reminder that we will be putting today's webinar session up on the FBAA YouTube channel for you to access in due time. And you can reach that on the link that turns up on your email shortly after this session. We'll also be sending through an email with Donelle's contact details on it, should you require any further information, and also the CPD code will be on there as well. So I just wanted to say to everybody again this morning, especially to the Melbourne crew, guys, hang in there. It's not too far to hit that light at the end of the tunnel. It is coming. If we can be of any support from the FBAA's point of things, please reach out to me and let me know if you've got any questions, anything like that you need answered. You know how to reach me. My email's simple. It's leah@fbaa.com.au. The team are back on board full time, so if you need anything at all, please let us know. But for now, I'll be handing back over from this session. Guys, it's been a fantastic morning, and I am looking forward to seeing everybody shortly.
Thanks, Leah.
Thanks, guys.